This recession really made me realize that I was wrong. And the understanding of crypto and adoption effects and network effects and technology made me realize that I was wrong. Again, nothing wrong with value investing. It'll do absolutely fine. But it's not the way to create, it's not the way to take risk. And again, that's not for everybody.
Is that why your opinion or why your portfolio has gone from a small percentage of crypto to a pretty large position?
Entirely. I was an equity cynic. I didn't like the equity markets, too high valuation. I would do some trading stuff, macro opportunities, but I've never been that buy and hold guy. I just couldn't get comfortable with this whole world. And then crypto started, and I've been in the space since 2013, but I still hadn't figured it out. But I've really figured it out over the last 18 months and what it meant and how big the opportunity was. And I realized that to create true wealth, you have to understand a theme really well and have very high conviction and concentrate all of your risk, which is the opposite of what we're told. But if you go back and look at Jeff Bezos, why is he so rich? Because he concentrated all his wealth in one bet. Now, you have to do that intelligently. You have to think about it. There's a bunch of, caveats, a lot of caveats to that. But that's what I'm trying to tell people. It depends what it is you want to achieve. And for some people who are not really investors, to give some money to growth guides, give some money to a value guide, that's all fine. But people who really want to get into it themselves, there's different opportunities. Some people can get rich owning gold mining companies. Some people can get rich owning value. Some people can get rich being short sellers in a bull market. There's no shortage of ways of getting rich, but the easiest way is trend following. And if you've got exponential trends behind your back, everybody can be the dumb money and all make money. And that's great.
I mean, even Buffett says diversification is only for people who don't know what they're doing, right?
It's true.
When you talk to your fellow macro experts, what do they all think about crypto and Bitcoin specifically?
They all moved across to macro. So I was probably the second in the space to move across. Dan Moorhead was first from Pantera. Then I started writing about it in 2013 and investing in it. Not many of the macro guys did, but then after that, one by one, they all went. I mean, they just left macro. And I keep bumping into old famous macro people that I grew up with, all entirely in crypto and technology. And they just forget it. Everything else is a waste of time. You just don't generate the types of returns, risk adjusted or otherwise. So they're all there and they're all coming. I don't know a single macro guy is not involved, put it that way.
Do you think there's a pool of investors, not necessarily your sophisticated investors, but just general investors that are trying to chase the next Bitcoin? I think that's like my biggest concern really is people saw how much Bitcoin went up and how some people got so rich off it that they're diving into all these other ideas. And I'm not saying NFTs won't work or all these other things that are coming up, but do you think people are just almost blindly going into those just because they're hoping it's the next Bitcoin?
Yes, but that's normal. Right. And I argue with the Bitcoin world over this all the time. Bitcoin world is Bitcoin only. And I'm like, no, all investment has a risk curve. Where you are on your risk curve is up to you. It's how much risk you want to take. Now, it's the same in emerging markets or equity markets. You might start with the S&P, but you want to eventually end up owning Indian equities or whatever it may be, because they're riskier. They might go up more, but they might go down more. So risk-adjusted returns you're hoping will be better. That's what I do. That's normal. And that's why many of these alternative tokens do very well, because capital flows into them in the risk cycle. That's really normal. Same happens in junk bonds and credit and everything else. And because a bunch of people lost money in 2017, they're trying to tell people not to take risk in these things because they lost money. No, what we should be doing is educating people in what risks they're taking and why they're taking them. So they should not be putting all of their money into a token because they think it goes up hoping that it goes up more than Bitcoin. They need to be educated in the type of risk that they're taking, and that it's okay to take that risk, but maybe have some Bitcoin and maybe some Ethereum, and then you can add some of that risk at the edges. I had the dinner with a mate of mine last night from Little Cayman, the island of 140 people, and he's like, I've been watching all of your stuff, and I've been watching Real Vision Crypto and blah blah blah. I love this space. I said, what do you own? He said, I own Cardano and XRP. I said, why? What do you know about those? Well, they kind of feel like they could. I'm like, start with a core allocation to Bitcoin, move into Ethereum, spread some other money into other projects that could be interesting. They're very early. Some will go to zero, some will go nowhere, some will go up a lot. But none of us know at this point. We don't know what the adoption curve looks like. But that's what the space needs to be saying, and not shutting people down and saying, well, I lost money in 2017, I'm trying to protect you. That's nonsense. That's just tribalism to make Bitcoin go up more than others. Doesn't make sense. It's a big world out there.
I can't count how many times I've been told by people, because I'll not pressure them, but I'll push back on them and ask them, or I'll challenge them and say, why are you investing in that? And they'll just say, oh, I feel like, or I feel like this. And I'm like, God, that's not a thesis, right? That's hopium. That's not.
No. So how I addressed it was with some intellectual honesty. So I'm like, I pretty much understand Bitcoin as well as anybody. Not the technology aspects, but the macro opportunity, what it's doing, where it's going, the players involved, all of that. Ethereum, I'm pretty comfortable with as well. But I also think that the entire digital asset space is going to be absolutely gigantic. And so I wanted exposure. So if my thesis is that network effects are the largest drivers of these things, so I went on to Twitter and asked people, okay, shill me your best coin and why. So I got 6,500 replies. But what I did was just skim through and look at, okay, what are most people involved in? What do they care about? Where is the reasonable analysis coming from? So I got a basket of 10, equally weighted. It's only 10% of my portfolio. It's actually gone up 100% in a month and a half. But it's 10% of my portfolio. And I just took an equal weighted basket and said, look, I don't know, I'm not smart enough. But I figure that the space will go up because the risk curve goes up when the bull market goes. And within that, I'm going to learn a lot about this space, about which one is which, what's working, what projects are really getting network effects. And that's okay to do, because let's say Raoul's a total idiot. 10 out of 10 go to zero. I lose 10%. Last time I checked, Ethereum was up 10% today. I don't care. That's how you take risk.